Trader's Edge with your host, Steve Rhodes.
Welcome, folks. This is Tom O'Brien filling in for Steve today. I hope everyone's having a great day, safe day. Let's make it a great one. Market-wise, what we have out here, folks, you get the Dow rate. We get the S&P, the futures down 5.5. You get the NASDAQ off 10. DAX and the FTSE are getting smoked out here. You get the DAX down 125. FTSE's off 111. Gold's up 980. That little baby's made a bottom. You get platinum up 12. Silver's up 5. Bonds, they're the ever-ready bond market. 10 years up 4. The 30-year is up 8. King Dollar's taking a break. She's back 298. You get the euro up 39, and the yen is down 26. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world, going around the world, what we have is this, okay? We go over to Asia first. We take a look at Asia. This is what you had happen in Asia last night. It was a flat market. That's after the China market come out and said, okay, they had a production upswing. Guess what? It didn't do a thing. You had Shanghai up 0.8%. The Nikkei was down 0.7. The Hang Seng was off 0.5%. Europe, whole different ball game out here. You get the FTSE right now down 1.7%. The CAC's off 1.7. The DAX is off 1.8. Our own markets, when we take a look at what we had happen out here yesterday, it's real possible that good old Alibaba actually did ring that bell, folks. It's going to be amazing if Alibaba rang the bell, particularly because Alibaba had rang the bell in Hong Kong in 2007, at the high, mind you. What are the odds of that? It would be really crazy. Bottom line, if we take a look at the SPY, what we have is this. We closed at 199.15. The swing point out here is 198.38. We're going to go right after it on the open. This is what you have. The 198.58 is where we're trading right now. And the last time that we were down here, which was on the 15th of September, it rejected lower price, had lighter volume. The characteristic out here today is going to be this. Your swing point has 76 million. Right next to it, however, when we went top side, is 116 million. So 116 million is just your benchmark swing. I suspect we're going to go after that right now. We're going to be 8 pennies away from it on the open. I expect we're going to basically blow right through it. What we will see, if we take a look at this future S&P first, what you're going to see here is that, no doubt, like over and over again, this thing will try to make a little bounce out here. It could bounce to a price point. Okay, so you can see the downdraft even this morning at 0830. You got down to 1977, but there's no juice down there. So you can bounce up somewhere about 82, about another point from here. That's on the shorter term basis. That swing point will get tested. And as it gets tested, that's going to be basically the line in the sand. The reason that's also the line in the sand, in the future market, what you have, that number, folks, in the future market is 1968. So you can see where we are. That's down to another 12 points. That level there will also get you inside the 1968. Gets you inside the lower level. The lower level being the highs that were taken out in July. That high there is 1977. The low of that is 1969. The low of last week is 1968. So it's going to go after it. You break that, and we have an expansion of volume. Guess what? You're going right down to the 1882. And what's going to be intriguing here is this, is that yesterday the Dow, you had it off a few points. Percentage-wise, though, it was only off 0.6%, which is nothing. Okay? Bottom line, though, we're at higher numbers, so you only have to be down 0.5%, and that 0.5% looks like a higher number. Percentage-wise, the same, but it absolutely looks like a higher number. Gold contract. Now, this is going to get really intriguing with gold. So, what do we have with gold? Gold, yesterday, got down to a price point of 12.08. Had light volume. What we have out here today, you got 88,000 contracts. We're at 12.26. 12.41, it has to get back inside, but my take is that gold is bottomed. If you look at the GLD, what you're going to see in the GLD is this. The GLD was coming into the last two swing points on a weekly basis, dramatically lighter volume. You know, when we're talking dramatically lighter volume, we're talking about 35 million shares on a weekly basis was coming into 63 million shares, was coming into 109 million shares. So the bottom line is that that it tested that level in order to understand that, okay, you're going to be up and out of it. Well, what you need after a test like that is a sign of strength, no doubt. What they did with the gold equities yesterday, there's enough of them that they slammed down, no volume, rejected price, went back topside again. That's how these bottoms normally get made. Bond market, we go take a look at the bonds. We start with the 10-year bond. What you have with the 10-year bond is this. Up 3 ticks today, not that it's a lot. You'll build a little cause here. The 10-year and the 30-year had been coming down since August 28th. You went straight down from 125 into 123. 123, let's see, 123.16. Sideways move. I suspect we'll get a sideways move for a couple days, and then you'll go topside again. The 30-year bond, we have with the 30-year bond, same type of setup in the 30-year. The 30-year has been stronger than the 10-year for quite a while. 30-year is at 136.31. That's down from that 140. 71,000 contracts thus far this morning. I expect the same type of setup. I mean, you go sideways, you build some cause for higher price. King dollar, you'll see whether King dollar wants to take a break here. King dollar's had a nice little run topside, DXZ4. So what we have with King dollar is this. She's backing off today, dramatically lighter volume, by the way. So it's going to be wild watching this shake out, because King dollar is down 283 ticks, but you're only doing 12,000 contracts. You know, we'll see how you. We already tested the high with lighter volume. So first off, King dollar's done exactly what it should have done. It went up to the swing high, going all the way back from 2013, hit it. Basically, it hit it right on the nose, too, which is pretty amazing. So if we take a look at what we had with King dollar here, your swing point up there on the continuous contract is 84.965, and we hit 84.975, okay? So what is that? 10 100ths of 1. Gets right there, backs down, and now that's on the weekly. We bring this back on a daily basis, DXZ, and what you're going to see on the daily basis, it hangs up there. Yesterday it got above it, closed below it just slightly. So this is very subtle. No, there's no doubt, okay? Because your volume characteristic, well, first off, it finished what it should have been doing. Then you went topside again on the 17th, hit 84.86, had 66,000 contracts. Yesterday, it tested 66,000 with 18,000. That's what it takes to basically say, okay, now we're going to back off. What that was showing is that, okay, we have no more buys up at that level. Got over it, closed underneath it, subtle, back off today. What will have to happen for this to get lower, however, it will have to get under 84.005. You know, so we'll see how that does shake out. But I expect what you're going to see out here today is that you're going to see some high volatility, lower prices, expansion of volume. We go take a look at the three. Oh, well, here. First, we're going to look at the IWM. The small caps are the weakest index out here, folks. IWM yesterday, we're at 112.37. That's going to open at 112.02. The swing point that's going after is 109.86. We did yesterday. We did 45 million shares, taking out 51 million. The small caps themselves haven't even been able to do a dead cat bounce, which is pretty amazing. So you're going to see those small caps go after this 109.86. If we look at the 3 Qs, the NDX 100, what you have with the NDX 100, that also had an expansion of volume yesterday. We did 48 million shares. That's going to go after 98.05 today. And right now, it's going to open at 98.74. Inside that NDX 100, if you're trading that, what you want to keep your eye on is Apple. Apple has managed to stay over the 100.70. It's opened a couple days times below it. It will open right at it out here today. That number is a big number, folks, okay? That number is the high that was generated, that is taken out, that has stayed over. And, you know, I'm not the only one that's looking at that. It's 100.72. That was the high from September. You get underneath that number, guess what? Can't bust them up. You are going to bust them down. That's the real bottom line. You know, so that level, that's where it'll basically head for. The IBB, this is important to understand. The biotech, NASDAQ Biotech Index, that hasn't croaked yet, okay? That index itself is what would basically bring the NASDAQ down ASAP. It's rolling, no doubt it's rolling over. We'll see how it basically attacks the lowest swing point out here today. It closed at 272.55, and what you have out there at 272.55 is that, first off, you'd have to get into the 268 area. You get into that 268 area, then you get gain. You know, that's on a shorter term basis. Longer term, this thing's going south, man. This thing has a high volume low, folks, at 207. It has a high volume low at 242. That's on the daily basis. We put this on a weekly basis, and what you're going to see is that about as clear as a bell. This last test up in the high out here, you were testing a weekly with 8.4 million. You tested that with 4.1 million. You tested it again with 5 million. See ya. Don't want to be ya. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Our phone number is 877-927-6648. You get the Dow Industrials. S&Ps are off 5.5. NASDAQ's off 11.5. Right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Right now, you got the S&P's down 6.5, Nasdaq's off 13.5. You got the Russell off 3.5. We have gold up 8.90. We got our man, Mr. John Logan. And don't forget, folks, every trading day right here at TFNN, John kicks us off 8 a.m. Eastern Standard Time. You can get all the programming at TFNN right on your cell phone. TFNN.mobi. 8 in the morning to 6 in the evening, live content. We replay that content. And as you're over at TFNN, folks, don't forget, we are doing a live trading contest. That is we're going to be giving away $10,000 in cash. It costs absolutely $0 to sign up. You have until Thursday at noontime to sign up. Check it out on the front page of TFNN. John Logan, what's going on?
Hey, man. Hadn't talked to you in a while. How you been?
I'm doing great, man. How you doing?
Doing all right over here. Feeling a little under the weather today, but I'll get through it.
Yeah, there must be something going around, man. You know, it was interesting this morning on the, I was listening to CNBC, and it sounded like they were all sick, man. You sound a lot better than they did.
Yeah, I there's some crazy stuff you can get into over here eating, and you know, if you saw me, I'm not averse to not eating a lot of food, so I like to try a lot of things, and I think I tried something a bridge too far last night. So.
I love it. So now, are you in Hong Kong or in the Philippines? Where are you?
Actually, I'm out of Hong Kong.
Okay.
God, they had some interesting, weird food there. I saw literally a lizard skin on a stick with them stretched out that somebody was eating. It was wild. But
yeah.
I'm in the Philippines now, and it's going good. Getting back to kind of on task here.
Yeah, totally.
And,
so,
go ahead.
So, what time is it there now? Your time?
Right now it's 9:26 here right now, so I think it's 12 hours.
Oh,
exactly.
That's cool. Then that's pretty good then. Yeah.
You know what? You know what's cool about doing things like kind of getting your day started, so-called day started at night.
Yeah.
Is you get to kind of, you know, like you wake up there, you slam some coffee in the morning, you're trying to read some news reports, and you know, just it's like a rush. And here it's kind of cool because if you're doing the U.S. stuff, you get to kind of ease into the day a little more relaxed, and it's a little bit different trading day actually when that happens.
That's cool though. No, I can wrap my head around that because and especially, which is really sweet, it's not midnight. You know what I mean? It's like you're coming on 8 o'clock your time, which is pretty cool, man. Yeah, you can get a lot done. That's awesome, man. Yeah.
Eat some dinner, get a massage, and head on into the office.
There you go, man. Totally. Well, we get some volatility, man. There's no doubt about that. You know, we'll see what this. You know, it's going to blow my mind, John, if this Alibaba really rang the bell. That's gonna be sick, man. Because when you read the story about, you know, I mean, the bottom line is that it already had gone public in Hong Kong, and he bought all the shares back, and it's like, you know, and my understanding is that was right at the high also before in 2007. Do you know what I'm saying? So it's like,
well, you know, the Chinese, I'm listening to everything you're saying, and I'm thinking how weird that is because the Chinese are so superstitious at the same time, you know, and and when they get wind of that and they start see it happening, I mean, it's almost like, you know, I got some friends over here that are way up the chain at Bloomberg and some big financial institutions.
Yes.
They are so superstitious. I mean, I love them. I mean, they're great Asian friends of mine. But you know, they go into a hotel room just to kind of tell us a small story. They go into a hotel room in a major league hotel like Mandarin Oriental or something like that.
Sure.
And they check it out for all the feng shui stuff and all this kind of.
Oh yeah.
And then they go to a different room because a lot of them think that maybe a ghost went in that room. That was their initial thought. So it's really weird, wacky stuff that
I love it.
Superstitions over here. Yeah, it's crazy.
I love it. Well, you know,
so you might be right on Alibaba. So
you know, what's so funny is that when I was in the catering business, this is years ago, right? I worked with this family from Taiwan, and they had all immigrated from China, of course, right? Because that's, you know.
Right.
And so when I was in the catering business, you know, you have all these catering trays and all of this, right? And so they're having a party, and I let them use all this this catering stuff. And when they gave it back to me, right, it was so cool. Every single tray that they had given me, back to me, John, right? They had the little red envelope, right? And inside the little red envelope were like 2 beautiful brand new dollar bills pressed just right. I mean, pressed beyond belief. I still have them. That's like 35 years ago. Because it was so cool. They did it up so well. I'm saying to myself, this is amazing. And so, bottom line, and they were telling me, well, this is lucky. I said, that's great, man. I'm going to keep them. Isn't that funny? I love it.
Taiwan is the one outstanding place.
Yeah, it is, man.
Have you been to Taipei?
I have, yeah.
Yeah.
Hey, John, you mind staying to come back?
Yeah.
Okay, cool, man. It's John Logan, Tom O'Brien. We get Mitch from Boston. We get Terry from Florida. We get Fletch. We want to... All you tigers and tigresses growling and prowling with us. Nasdaq's off 14. S&P's are off 7. We're going to bring it back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. John Logan, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow off 41, Nasdaq's off 11, S&Ps are off 5, and if we take a look at some of the high flyers out here and see what they're doing coming right off the get-go. We have, let's see, Medtronic is down 163. Yeah, the inversions are going to go south, folks. This is going to be interesting watching the inversions. Covidea is off 254. You have Microsoft down 24 inside some of the Dow. And what they did with the inversions, folks, the Treasury Department just come out. They're going to have a problem basically lending money from outside of the country in order to basically do the deals. It's their own money, but the bottom line is that it is a loophole that they just closed. You know, when we're taking a look at your signal box there, John, I'm looking at all that red. So this is pretty. I haven't seen red like that for a long time in that signal box, man.
I didn't know you were paying attention to this. You know what I'm doing right now?
What?
I'm doing. You know, we've done a lot of research on this market breadth over here on the left. If you can see that,
I can. Yes.
And I'm going to kind of throw something else in here really quick just to kind of prove my point. This is a weekly kind of snapshot. We can move this over. Hold on. Okay, here we go. This is a weekly crossover snapshot, and we stopped this chart a while back because we were just doing some historical looks at this.
Okay.
And this is back. You know, God, I think back into 2000. I want to say 2003.
Yes.
All right. So, and obviously weeklies are. You know, they need a little time to unwind and,
sure.
and do some things. But this is, if you see that was 728. Okay? And
yeah.
At that point in time, what happened there is our blue line is our above profiles on a weekly basis, and our gray line is below profiles, and our orange line there is within profiles.
Okay.
So what happened on the 28th is that we had market breadth, as we see it on a weekly basis, change tone. All right.
Yes.
Now, it hasn't happened too many times, and when that happens, markets go down. All right. This is not brain surgery to go back and look at this historically.
Right.
Now, and as you can see here, as this market breadth has stayed relatively positive over the last couple of years, and I'm just going to go back to when me and you were pulling our hair out trying to to probably I'm assuming that back into the 2009s of the world, this market has stayed truly, seriously market breadth positive on a long-term basis with a couple of exceptions. And those couple of exceptions have either allowed you to hedge your portfolio from the buy put side or whatever.
Yes.
Or get short. Now we did your program that Wednesday, a month and a half ago or whatever.
Right.
And I'm going to pull up. This is the S&P daily chart. And that is the 28th right there. Okay.
Yes. Right.
Then we had that 100-point sell-off, and that was that crossover on the long-term weekly that we saw in market breadth. So market breadth turned negative based on profiles, never been disseminated before. And then when we got down in here into the August 8th, the 9th, or excuse me, the 7th and the 8th, that's when the crossover back over happened. So what it told you basically is that when we have that breadth change, it's okay to sell rallies. It's okay to sell rallies, and it's not okay to try to go long until that crossover happens again. Now, looking back in time, you know, the neat thing is if we'd have had this, if me and you we'd have kind of opted out on probably some of the short ideas that we had.
Okay.
Because, in my opinion, looking at this tool the way we have it now, and I'm going to pull this back up.
That's pretty cool, man.
Dude, listen, it's a game changer. And right now, we're still above, you know, market breadth, positive on the long term. But look at the daily situation changed 2 days ago.
So when we're looking at this, if you're driving in the car, folks, we're looking at the signal box, and it's red. But on the left-hand side, we're looking at the weekly, daily, 240-minute, and the 60-minute. So I'm looking at the daily right now. I see above is 12%. What is that? Inside is 37, and below is 50. Oh, yeah, I got it. Okay, right,
yeah.
right.
Now, this crossover, and I can pull up the daily. Let me pull that up really quick for everybody to see. I got to start it up. Anyway, the daily crossover happened about the 20, I want to say the 20, July 25th or so.
Yeah.
Now that even gave a bigger leading indicator before that 100-point sell-off did than the weekly. The weekly kind of confirmed it, you know. But right now, this thing started turning market breadth negative. I'm going to tell you when it happened.
See, isn't that cool, man? That totally makes sense too. Because the longer that this distribution stays at the top, too, folks, the lower you're going to go. You know, and you need distribution in order to get lower.
Yeah, there's a couple things that happened yesterday. You know, with that market breadth changing to negative, basically on my favorite time frame, the daily.
Yeah.
Not to mention that the 60s and the 240s were already way balanced towards the downside right at the start of the day. When this thing opened up, that market breadth changed severely. But see, the cool thing is this inflection point right here at 1994.50? We've been talking about that for a while. It's been in force for a while.
Yes.
But you know, what do you do? Do you hey, we've closed above and we're coming back and retesting. Do you buy this thing? Well, with the market breadth information, I call it metrics.
Okay.
With that available, no, you do not buy this.
Right.
You do not buy this inflection point, and you wait to sell it, and you get the confirmation. And now we're sitting here with a new profile.
Yeah,
we talked a lot this morning about this 1984.55 area to hopefully wait patiently for a high probability area. This is, again, a shorter term time frame, but 1984.55, waiting for that bounce. Now we've got an area that we could possibly sell. And why do we want to sell that? Because the breadth is still crazy short, really. I mean, and none of these numbers are really changing. They're actually getting worse on the internals. 77 right now, 71, 49, 50, still hanging in there, very negative. And you know what this is saying too for your listeners: 249 stocks of the S&P 500 are actually trading below profiles right now, even with this bounce that's happening right now.
What a cool tool, man! This is cool, man. This is
Listen. I think it's a game changer, and we've been doing a lot of back testing with it.
Yeah.
And, at the very least, Tom, it gives you at least that the market's cooperating. The market breadth is cooperating with your ideas about going long, or it's not cooperating, and about vice versa going short. And it at least gives you some kind of conviction that you've never had before trading index futures.
Yeah,
we're gonna do this on every index in the world because guess what? We can do these market metrics on the Bovespa. We can do it on the Kospi. We can do it on the CAC 40, whatever. But right now we decided to focus on the S&P 500 futures,
which is just awesome, man. And because what happens, folks, is that when you put a couple simple tools together, sophisticated but simple, meaning there's clarity inside them, it makes a huge difference. I mean, it just, because you can take the profile, you take the breadth, and it's like, okay, man, the thing really does have a cross, which is pretty amazing. This is going to be wild watching this shake out, man, no doubt.
Yeah, I'm excited about this, and I'm hoping that somehow somebody will come in and buy a couple S&Ps and get it back up to 84. But, we may go higher. I mean, anything can happen. But the cool thing is kind of where to say uncle around this on the short Just, then you can kind of like try your so-called try your luck again.
Yeah, no doubt, man, no doubt. Cool. Let's go. This is going to be a beautiful thing. Where we got Clearwater, Florida. We got the Philippines, and now we're going to go to John in Philly. Hey, John, what's going on?
Tommy, hi. Good morning to you and Mr. John Logan. Thanks for taking the call.
Absolutely, man.
Tommy, question for you. I like your trade tactics, please, on the yen. The dollar-yen, USJY, and I'm in the Tiger's Den, so I see you've got the cash market up on the screen.
Yeah.
You had very successfully gotten involved with this back in mid-2012, and it's been a massive bull move higher in dollar-yen, or the yen currency falling versus the dollar.
Sure.
It's now about to, right at 109.50, last week's high. That is the downtrend line going back 24 years, connecting like 5 separate highs. My question, where do you see, if you're buying it around here, placing your stop? It's getting dangerous to be long, or it's getting riskier.
Yeah, it is, because the body. Okay, so the yen, folks, has gone from the 78 to 108. It wants to run to 124, which is like to me it's already broken everything and wants to go to 147. So this is going to be a trip. The real key is that correlation-wise, we should take a break here. I would basically lay off it, because it looks to me that the dollar wants to take a break right. No, well, let me rephrase that. It doesn't want to take a break. I expect it will take a break. Because if it doesn't take a break, folks, if the dollar doesn't take a break right now, that's what will tank this market beyond belief. Because the next move in the dollar wants to go to 89. If that ever goes to 89 in 2 or 3 days, the world is going to be like flipped out. So I'm not necessarily figuring that that's what's going to happen yet, John. Do you know what I'm saying? So
I do know what you're saying, yes.
So it would be easier to basically trade the yen off the dollar, and I would I think the dollar can get to 82.90. I know what's going to bring it down there, but realistically, that's a normal deal. It's going to be a patience deal before you get back into that yen, man. But it wants to go a lot higher, man.
Tommy, the reason I just bring this up, I appreciate you sharing that guidance. I'm trying to prepare myself for the possibility of that dollar yen, the USJY, which you're pointing out is 108.50, it is amidst, right as we speak, an explosive move higher. And when you look at currencies throughout history, currencies of countries that are falling down the financial toilet, if you will, tend to move fast, very fast. And in the case of Japan, with the Bank of Japan monetizing debts, with the Japanese government raising taxes April 1st and doing so again in October, I can't help but think there's a good chance the Japanese finances going into the financial toilet abruptly right before our eyes. So hence my question.
Yeah. Hey, listen, it's a good long-term trade, which is a beautiful thing. And these currencies, there's great when you run the right side of it, man. So,
thanks for your input. I appreciate it.
Okay, man. Have a great one. Have a safe one. It's so cool, John, is that we not only have volatility, but what's interesting is that the volatility really started in the currency markets. You know what I'm saying? So, that is a heads up in itself. But if that dollar ever runs to 89 without a breath, man, oh, man.
I know, yeah, and what was killing me is like you just said, that it kind of started with the currencies, and the S&Ps just kept staying cool-headed, whatever you want to call it.
Yes.
They just kept gathering their cells and doing their normal thing, and I just it's just a couple of times in the past 4 years I really thought we were going to have a decent pullback, and I've kind of been just like with the notes, I couldn't bring myself to short them ever again after some of the stunts that that have been pulled, and that's why I've kind of waited, and we talked about on the show a little bit, waiting for it to kind of cross back above 124.304 on the 10-year, just because really that mindset hasn't changed yet, and they basically said that hasn't changed. But the U.S. stock market, going back to that original thought, was, I'm still not thinking that they won't come in here and buy this. You know what I mean? Like it's almost like ingrained in my soul now that I've just seen it. You've seen it so many times.
Yeah.
It's almost like you have to have the confirmation now that there is something technically serious going on. Don't try to pick the tops, whatever. And right now those currencies, like you said, they will cause volatility in this.
Well,
good.
What's so cool is that like the S&Ps are bouncing right now, folks, and this is if you're a bull, folks, it's the worst thing you want to happen right now, because what you have, okay, and this is as John's talking about, because there's no doubt on a continual basis the bounce has been over and over and over again. And what the difference is here, okay, is that you already basically hit a high with outrageous volume, meaning blow off. You come down in Europe, you're still down in Europe. You get this little bounce going, and this bounce, this can get to somewhere like 1986, get flat, and then you're going to see it basically give up. The aspect of the bond trade. Now, the bond trade is interesting, John, because that's one of those heads you win, tails you win deals. Meaning, because did you see that in Asia and in Europe, right? Even with the bonds going down, bonds last quarter were up 7%, because in dollar terms, that's the action. You know what I mean?
Yep.
Hey, listen, man, have a great one. Have a safe one. We look forward to the show tomorrow, John. Thank you so much,
Thanks, man. I'm going to hit a sack early. You take it easy.
Okay. You stay right there, folks. Come right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. I'm Mr. Steve Rhodes. We'll be back later tomorrow. Basil Chapman's going to be coming up next. Right now, you get the Dow Industrials down 22, Nasdaq's up 2, S&Ps are up 1. And if you are a bear, folks, it's time to fire away, baby. What you have inside this S&P, this future S&P, right now you're at 1985. We put this up on a 3-day, 10-minute when you're right at ice. It's a beautiful thing. You know, we're at 1985. You can basically put your stop on the other side of 1986.75 and only give it a 1.5. And that's it, because the bottom line is that if you get over that level, then you'll get up to the 1992. So there's no reason to even giving it that much. What I expect you're going to see out here as Mr. Basil Chapman comes on is you're going to see a failure at this 1986.75. And then you're going to see an attack to the downside again, which is at 1977. So when you do that, when you set up that, if you are in the futures market, if you ever traded the futures market, you have a 1.75 risk, and you're going after 10 points to the downside. So it's a pretty good setup right there. If you are in the equity side, and if you're at the Nadex side, folks, okay, it's a field day out here right now. You know, because your trade is your stop. If you're in the S&Ps, what to take a look at the S&Ps is this, the SPY. Same setup on the SPY. What we've just done is this. On the 10-minute, you did 4.1 million, the last 10-minute bar, and right now we're only at 2.3. So the bottom line is that that is not even going to get into, I suspect, the 199.09. 199.09 is where we, that was the low yesterday at 1,550 hours. That's where this thing is set up. So the line's right here. And, you know, when markets move like this, folks, well, hey, you got to take it for what it's worth, meaning that it's always what the reward is versus what the risk is. And right now, the risk on the S&Ps is 1.75 to make 10. You know, that's in the future market. You go over to the, man, Jay, I got to love it. You go over to the Nadex platform, folks, and you can really leverage up for a very small amount. If you haven't test drove that Nadex platform, do it right now, because you can do two different things. You can test drive it right now, sign up for the contest. That's going to be another $25,000 that they'll put in your account. That you have to sign up right now, or you have to sign up by Thursday at noontime. The contest is going to start Sunday. It's going to go from Sunday to the following Monday, following Friday, rather. We're going to be giving $10,000 away in cash. You know, so the bottom line is that it's going to be an exciting contest. There's going to be a leaderboard up there each and every day. Of course, you know, someone else is going to be maybe up at that leaderboard. Man, Jay, just in the den there, he was just, let's see, is he selling? Yeah, he's selling. So he's given up $30 for a maximum gain of $296. In this type of an environment, folks, how that is about as sweet as you can get. It really is amazing. You know, but that's how, because what the Nadex platform is, folks, and this is what, it's really it's an option type of platform with limited risk. So you have defined risk that's happening, and inside the defined risk structure, what you also have happening is that because there's a time frame, meaning in the very short time frames, you're not getting smoked on basically the time value of the deal. You're giving up something on each and every one of them. There's no doubt about that. But all you need is volatility. And volatility is what we have out here. You know, so we'll see where this whole baby does shake out. The IBB, if we go over to the IBB quickly, that hasn't given it up yet. What I expect you are going to see, though, right here, right now, is this S&P to give it up. You stay right there, folks. I'm in. Mr. Basil Chapman's going to be coming up next for the next couple hours. Then, of course, we got Darryl Martin, Dave White, and we're going to be back here. Have a great one, folks. Have a safe one.
Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.